$200 silver. What about the potential for a financial crisis? Today, we're fortunate to be joined by Lynette Zang from Zang Enterprises. She's a trusted voice and a respected voice in the precious metals community. Lynette, welcome to Ron's Basement.
I am very happy to be here. Thank you so much for having me.
Yeah, we've had some really entertaining conversations over the last few years. And I think since last time we talked, the price of silver and gold have done very well. I'll start out by asking you, because I know our viewers want to know, when you think about silver, and you can touch on gold as much as you like as well, but I'm starting to feel like we could see much higher silver prices if we use the US dollar as the unit of measure here in the coming months, years. Any thoughts on that?
Oh, absolutely. And I mean, technically, what we have in silver, and when you talk about $200, frankly, that will still be chump change, because it seems like we are rapidly approaching the end of a massive double cup accumulation pattern. And frankly, in all the charts that I've seen, you don't see that. You do not see that. And that was something that was started in the 70s and then went to 2011. That was the first cup. And now we're coming to conclusion on the second, somewhere above $50 on the spot silver market will conclude that double cup. And then I think it's off to the races in terms of the spot price and in terms of dollars. And where you hear me stumble, it's because I 100% know that there is no good price discovery coming from Wall Street. And so when you're looking at the spot gold and the spot silver prices, it doesn't really, it's a trading market. That's not a true fundamental market. And ultimately, I can't give you a lot of guarantees, but I can 100% guarantee that at some point, all assets, all instruments go to their true fundamental value. And silver's is much higher than $200 an ounce.
Yeah. And at the end of the day, Mother Nature, market forces went out. I agree with you 100%. I also want to throw in, you mentioned this massive cup and handle pattern, those $50 prices that we had in 1980 and I think 2011, that $50 price that we're looking at, those are in $1980 and $2011. You adjust that for inflation, where do we go, Lynette, right?
Exactly. Really, spot silver should be, if it's going to be somewhere near a fair market, somewhere in the vicinity of $2,000, which sounds outrageous, except that's only because people put value in government fiat money. And honest to goodness, it costs them nothing to create it. And its fundamental value is zero, as witnessed by this $10 trillion Zimbabwe note, of which I can buy nothing with. It has zero purchasing power value.
Yeah. It's absolutely incredible what the period of time that we're living through. The very first time we talked, you said something to me that I will never forget. And I sat down here, I said, Lynette, everything feels, so crazy out there. When you look at all these politically, what's going on, monetarily, what's going on, fiscally, what's going on, and then you look at the economy, like everything feels a little crazy. And you said to me, well, it feels crazy because we're probably getting near the end. And when you talked about earlier about the prospect of 2000, I always say, I think the price of silver as measured in US dollars could go to infinity at some point, right? When the dollar becomes, most people don't get that. Most people scratch their head and, like they're living in this little aquarium or bubble, but it's like, how much does silver cost in Confederate dollars? Ask somebody, from 100 years ago. It's infinity at this point, except for the collector value.
Right. I happen to have a Confederate note. And it's worth pretty much, and I probably paid, because I don't pay a lot for this stuff, right? Yeah. They're worth the same thing, which is nothing. Mm-hmm. And guess what? It's true with this stuff too.
Yeah.
It costs nothing to create it. It costs less if they create it digitally and they don't use paper and ink. And so how can it have any value? Because quite honestly, the easier it is to create and spend money, the more fiat money that will be created and spent, and push all of that fiat money products, those fiat money products up in nominal terms to 10 trillion. What difference does it make? You know, this is not an outrageous number to me because I understand it.
Yeah. Yep. And it goes back, and I'm sure you've heard this, and I've heard it too, but we're almost like we're brainwashed. Like, I would probably consider myself to be a little more, I don't want to say, for lack of a better term, enlightened than the average person out there. But I still think of the value of this, right? A 1 ounce silver. I think of it in terms of US dollars, but really what we need to think of it in is in ounces, right? I mean, because
what you can convert it into.
Yeah.
Right? And what silver does is it maintains its ability to purchase the same goods and services over time. I have done so many studies on it. And when you look, I mean, the Bureau of Labor Statistics, how good was that data to begin with? Now, I mean, it doesn't mean anything at all. But even using that basket where they track the same thing from 1913 on, the last time I did it, I think that basket was up something like 2,500%, something like that basket of food. But silver at that time was up like over 3,000%. So you see, it maintains your ability to buy the same thing. But during that same period of time, spot gold was up like 16,000%. So not only does it maintain your ability to buy the same goods and services, but it actually expands that ability.
Yeah. Because as the economies expand and the populations expand, I like to think of like my grandpa. Let's say, you know, he was out in his yard working back in 1950, and he had his overalls on, and in one pocket he had an ounce of silver, and in the other pocket, I don't know what the price of silver was in dollars in 1950, but let's say he had 2 paper dollars. $1. Yeah, right, because of the silver. Yeah. So he had $1 in one pocket, an ounce of silver in the other pocket. He unfortunately died of a heart attack, and they hung his overalls up in the closet, and you know, grandma just died a week ago. We find grandpa's overalls. What's that dollar worth, and what's that ounce of silver worth, right? It's no comparison.
Exactly. And, you know, you brought up 1980, and you brought up what was the price of silver then, because it was always amazing to me. Actually, one day, not that long ago, I lift weights. And so I was with my trainer, and he's an attorney turned gym owner. So he's a pretty bright guy. And we have some really interesting conversations, and I've probably been going to him for 5 years already or something like that. So this is a very long period of time. And I don't know quite how we got to talking about this, but silver as our coinage happened to come up in the conversation. And his response was, "We had silver in the coinage?" And this guy is a history buff. And I looked at him and I said, "You didn't know that?" And he said, "No, I had no idea." And so what I ended up doing, which I don't have here right now, and we're making it a little bit different so we can pass it out. But what I realized is that what you and I are asking people to do is believe in sound money. When anybody that was born in the vicinity of 65 or later has never really used it as money. Like, I'm 71, almost 71. So I remember it being our money. So what we did was we came up with what we call our coin cards, and we have a silver quarter on it pre-1965, and then we have a new quarter on it, because people need to understand that governments and central bankers have a lot of experience in shifting from one currency, one fiat money, into the next fiat money. And the way that they get you to do that that you have to volunteer. If they force it, you know about it, and they don't really want you to understand it. So they make things look as close to normal as possible. And so I know that this is hard to see, but I think
Yeah.
I do. Okay. But this is 1957 silver quarter. And this is a 2024 or 2023, whatever. It's a new one. And you can see that they look very similar, right? Except for the edge. This one's all silver. This has some copper color in there. This has value. It's almost a quarter of an ounce because it's 90% silver and a quarter is a quarter. I mean, they were kind of logical. A dime is roughly a tenth of an ounce, a quarter of an ounce, a $50, half an ounce, and a silver dollars an ounce, roughly, because pre-65, they're all 90%. But that's the way they do it. And I love showing this example. Give me 2 seconds. I'm sorry. Sorry about this.
Oh, you're great.
I could do this.
And 99% of Americans today wouldn't care which of those quarters that they got. If they got the 1954 silver quarter, most people, they'd spend it, wouldn't realize that it's worth whatever, $8 or $9, $10.
Except, you don't find them in circulation. And I'll tell you, as we're passing them out, because I hand them out everywhere I go. I go to the doctor's office, I give it to them, and I explain it. And I encourage people to join the Citizens for Sound Money movement because we've got to get gold back in the system again. But I want you to look at this, okay? And there's a reason why I'm doing this. But, well, that's not actually an accurate one. This is more accurate, okay? Because this is pre-1933. So first you had this. Then they came up with the certificates because it's so much more convenient to carry a bill in your wallet than this so heavy coin. Oh my goodness. And you could
want the gold coin.
Right? Yeah. You could walk in with this, you could walk out with that. But at the same time, and this is critical for people to understand because it is happening again right now as you and I are sitting here speaking.
Yeah.
Corporations converted their corporate debt, and I have all the proof and evidence from the Fraser, so from the Federal Reserve itself. Corporations converted their debt into Federal Reserve notes. So corporations were instrumental in shifting us into the system because governments wanted to tax and spend, so they created the inflation tax, and corporations wanted to pay you less, so inflation covered that puppy as well. So 20 years people worked with all three of them. And you can see there's the little gold thing to remind you of this. There's this $20 bill to remind you of that. When these two things went away, people didn't think anything had changed. But in reality, everything had changed because by giving up this, we gave up our power over the central banks and the governments. Because up to that point, if you did not like what they were doing, you'd walk in with this and you'd walk out with this. And that
you could have your physical.
Exactly. Well, you could have your physical, but it was more than that because when you took the gold out of the system, there were more restrictions on how much debt our government could grow. And they took us from this teeny little 20th of an ounce, which is a $1 gold coin, which was equal to a 1 silver dollar, and equal to, where do I have it in here? A silver certificate. I have it.
I've got it. Hold on. I have it, Lynette. I'm prepared. I was going to
Yay. Okay. So all of these three things were the same. When this went away, they still had those two for a while until 1965. And then that goes back to this change. So, and the other piece of that is critically important is that our government, I can't believe that they got away with this. And I mean, and I see it now and I'm understanding it better, but it's still just crazy to me because the sitting president at that time, President Johnson, actually said that if anybody tries to hoard this silver, which is what the Hunt brothers did, drove the price to $50. And then our government said, we stand ready to sell silver at $1.29 an ounce to maintain its price. I mean, why didn't people go, wait a minute, a government is talking about going in and manipulating the markets? No. But I was alive then. I remember it. I was a child, but I remember that. And I remember sitting with my parents and my aunts and uncles Friday night. I used to love listening to all their discussions around the table as they were playing penny ante poker. And I never heard them talk about it. So that means it didn't impact them. And my Uncle Al was one smart guy, very smart guy. He knew how to accumulate gold when it was illegal to hold more than 5 ounces any other way than this. Mm-hmm. So the reason why I bring that up is this is a physical representation of Ethereum, because there is no physical Ethereum, right?
Right.
Doesn't it look an awful lot like that? How about Bitcoin? Right? Mm-hmm. And what do they call Bitcoin? Digital gold.
Yeah.
How about XRP? Right? Why, Ron? Why are cryptocurrencies, the physical depiction of them, gold, silver, or platinum?
Mm-hmm. Yeah.
Are they trying to do the same thing? Yeah, the answer is yes. Yes, they are. They want you to think that that's just like gold and silver, but it's not. And there are lots of reasons for that.
I always called silver the original form of cryptocurrency. I told you that before we went on here, because of its ability. I mean, as I understand it, silver was used as money before gold was, for several hundred years, and then gold came on the scene. I do want to ask you a question and see if you agree with this or can clarify it for me. I've heard it said recently that now we're in this situation where our government, it can do whatever they want with money, obviously, or, with currency. It can print with currency, it can print. And we're in this situation where we have $37 trillion in debt. And is the debt and the racking up of the debt higher and higher and higher? I've heard it called the inflation tax. Are people saying that because the more money that the government prints, and as the prices of everything, then as a result of that dilution, as the prices of goods and services that average people need to buy go up and up, that it really is like a hidden tax on people? I'd like to thank the sponsor of this video, First Mint. They're a silver mint located in Las Vegas, Nevada, creating world-class silver bullion products. As a matter of fact, here's a 5-ounce silver bar. You can check this out for yourself on their website, firstmint.com. A couple of things unique about First Mint. They're owned by First Majestic Silver, headed up by Keith Neumeyer. So they're getting the silver out of the ground to the mint, to you, from the mine to the mint. Again, you can check them out at firstmint.com. Thank you to First Mint for sponsoring Ron's Basement and sponsoring this video.
Well, absolutely. And actually, if you read the documentations, when they were creating this whole Federal Reserve system, that is actually what they said. What they said is, for governments, we need to be able to tax more and spend more, but gold creates restrictions on what we can do. And so that's why they did that. I mean, this little 20th of an ounce backed $1 when they installed the Federal Reserve, because what they needed, and see if you haven't heard this, more flexible money, right? Now, this little thing, instead of just backing $1, it backed $2.40. And that's what I'm trying to bring out when I'm talking about these Federal Reserve notes, because the Federal Reserve is neither federal, nor do they hold reserves, but it was corporate debt. And I'm telling you, I have all the evidence on it. Corporate debt was converted into Federal Reserve notes, and that's what actually created the Roaring 20s. But if you look on the purchasing power chart, you'll see a very rapid loss of roughly 50% between 1914, the beginning of 1914. into 1920, and then in the 20s you regained a little bit of its purchasing power because that was the beginning of it, and then all of that new money, that flexible money sloshing around the system, they started that was when the US started their consumer driven economy, because that was also the first time in history where just the general public had access to credit. Right now. So, and they let them have lots of credit, especially in 1928. It's really an interesting when you look at this stuff, because I see it again, right?
Yeah.
It's history repeating itself. Well, but in before 1927, I believe it could be 28, but I'm right in there. All central banks had a limited charter, right? So they were allowed to be in existence for between 15 and 20 years. Those were the typical terms, 15 or 20 years. This Federal Reserve was given a 20-year charter. Considering that they came out in 1913, that would put it that the end of their charter was 33. Well, is that a coincidence? I'm not sure, but okay. I just think it's interesting. 1927, for the first time in history, the Federal Reserve, or a central bank, it happened to be the Federal Reserve, was given an unlimited charter. Wow. An unlimited charter. And so I think it's coincidental that in 1928, that's when the big industrialists that knew that they had built this paper pyramid in the stock market, well, the public started getting into the stock market in like 27, and it kind of ratcheted up. By 1928, all of that roaring 20 money was flooding into the stock market, owned more by the general public. And then the Federal Reserve took the credit punch bowl away, and we had 1929. Okay. Now, I don't know about you, but I'm watching an awful lot of risk transfer that has been taking place in here. And so I think we have a repetition, and I do not think that it's an accident that they're depicting cryptocurrencies as if they're gold. But you know what a huge difference is? I mean, there's lots of differences. Number one, this is used, and so is silver. These are both used in every single sector of the global economy. These are used in one place. When you mine gold, I have to speak about gold particularly because silver gets used up in industry. Gold is indestructible. So it takes labor and energy to mine gold, but then because gold is indestructible, it can be used over. That same level of energy can be transferred to every single sector of the global economy an infinite number of times because gold is indestructible. They want you to believe that this has value because it took energy and water to create it, but it doesn't store that energy or that water. It is used up.
Interesting.
So these are like really interesting pieces that people don't seem to talk about or understand. But what you do need to understand, everybody needs to understand this. I mean, so I'm like as serious as a heart attack on this, is there is officially virtually no purchasing power left in the currency. And so they have to create. That's what the Stablecoin Act was about. The Genius Act, I'm so sure it's genius, but okay. The Genius Act is about creating an additional artificial market for dollars because there's a huge race going on. We've just had abysmal auction results from our treasuries, but it's the 10-year treasury that underpins the global economy. So if countries and banks are not showing up to buy and hold that stuff, and that's been shifting for a long time. That's not something that's new. Then somebody needs to be buying that stuff. And what they're really doing is transferring the risk to you through stable coins, and not necessarily to you, but all those third world countries, particularly in Africa, where their currencies are hyperinflating. And so people have glommed on to the US dollar stable coins because it's not losing value as quickly. But to your point, the more of this that they do, the less value everything out there has. And they've already gotten your purchasing power. So now they got to attack your principal. And it's that simple. It's that simple.
It's actually a sad situation. And, you know, I heard a data point yesterday, and I'm sure you've heard this as well, that 60% of Americans now have a negative net worth. And I to kind of circle back to what you were saying earlier about what happened in the 1910s, 1920s, it feels like they kind of turned, and I can't think of a better way to say this except to use the word slavery, but they've kind of worked to turn the country into a kind of a debt slavery nation, where your average person, from the time they go to school through the time they either graduate high school or college, never really learns about what they're taught is get into debt, get into as much debt as you can, and then work the rest of your life to try to pay that debt off, which you probably won't ever really be able to pay off. And that most people, and I think that's reflected in these numbers, that we've got 60% of Americans that have a negative net worth. First Mining Gold is a Canadian gold developer with 2 multi-million ounce projects in Canada, Springpole in Ontario and Du Parquet located in Quebec. Millions of ounces of gold in the ground in Canada, moving through the permitting process. The company has zero debt and many big catalysts on the horizon.
That is insane. How do they have a negative net worth? And think about the new system that was just put in place, because there is not one teeny weeny itty bitty doubt. I've lived through it. I lived through it in 65 as a child, 71 as a teenager. So, you know, what I'm seeing is a repetition, but they just changed the system. And they do say what? Gold is the money of kings. Silver is the money of, I think it's merchants or something like that.
Gentlemen.
Gentlemen. Yeah. Do you know that
Women,
quote?
Gentlemen.
So, and debt is the money of slaves. And 100%, there is absolutely zero doubt in my mind, because I read their documents from the IMF. That's who I'm referring to when I say there. It'll be the Federal Reserve or the International Monetary Fund or the Bank for International Settlements or the World Bank or the World Economic Forum. You know, you got to read that, because most people don't. And so they're probably a bit more open and honest in there, because they know people are not going to be reading them. But what the tokenization is about, and wow, I mean, the first time I came across this and started talking about this was back in 2015, was to enable people to hold all of their wealth on the phone. And let me tell you what's happening with AI and the ability to manage people's perception by feeding them information and moving them in the direction that they want us to go in. You know, people are so dependent. And if you have all of your wealth and all of your equity on your phone, and now you're out and you're being nudged to spend that equity, and you have so much of it, it's just a little bit there, and the smart contracts are on top of that. Before you know it, then we've fallen into what the World Economic Forum was talking about. By 2030, you will own nothing. And you'll have nobody to blame but yourself, because psychologically, you will not understand that you were encouraged to do that. And I've seen that before. I've seen that with business owners, small business owners. I mean, Amazon came in the late 90s, and Wall Street funded them. They didn't have to make money. They didn't have to charge sales state taxes. They didn't have to, they had a lot of advantages. But a mom and pop shop in your local community, they can't afford those losses. They have to make a profit. They have to charge you taxes. And so once Amazon had the big enough pie, well, then they had to start charging taxes. But this was a setup. It wasn't a level playing field. And so I know small business owners that couldn't survive because of this. This is a rigged game. And the sooner people realize it, become their own central bank, and become as independent and self-sufficient in community, because we got to do it in community, the better off we're all going to be. That's our battle.
Community is everything. And as you were talking, I thought most Americans, when this does happen, will be scratching their heads thinking, how did this happen? All I did was I did what they told me to do, because like you said, I don't want to, sound crude when I say this, but I think that the reality is that us humans, we are very easily trainable animals. Most of us, we are very, likely even myself, so it's going to be an interesting ride, especially when I think about, and I never get political on my show. I don't say pro or con, but when I objectively look at what's going on in Washington, D.C. right now, and when I look at the big picture, like we could probably talk another 2 hours about this, but with the national debt and what the administration is going to do, I think objectively we can look at Donald Trump's past and realize that he's a guy that likes debt. And he's a guy that likes to, run up. He hasn't exactly, how do I say this? I guess he's accumulated a lot of wealth, but he's not a person who's likes austerity and that let's just open the floodgates. Let's cut rates. Let's do, let's get this economy. And it just seems, I don't know, like the best long-term interest of what would really make for a long-term sound economy. Like those decisions aren't going to be made. Maybe some good short-term decisions, big parties, but any thoughts on that?
Yes, I have a lot of thoughts on that. And I don't get political either, because quite honestly, I've studied this stuff enough, and it didn't matter whether it was a Republican in office. Things have been moving right along according to schedule. And I do believe that President Trump is a change agent. And here's the thing, right? The thing is that when you have this level of debt that is not payable, so if you're going bankrupt and you get some credit cards in the mail, you will spend them. But you see, we need a big crisis to shift us into the next system. Additionally, what I want to say is President Trump also likes gold and has been known to expose gold for lease payments and other things. So I honestly do believe that this is the best shot that I have seen in my entire career of getting gold back in the monetary system, but it must be redeemable.
Yeah.
Because if it is not redeemable, it doesn't mean anything. And that's critically important for all of what Wall Street wants us to believe are asset-backed securities, right? If you cannot convert that token into the underlying asset, then what do you have and how do you even know it exists? You don't. You have to be able to redeem the asset, or, I'm sorry, I am not an engineer, nor am I a specific kind of engineer that can understand all of that stuff behind the scenes. And that kind of makes me go, let's see, can I be taken advantage of? Probably. And just like inflation has robbed you of your purchasing power, really interesting thought experiment is anybody can do this. Go on the Federal Reserve Education Department, the FRED, F-R-E-D, and in the search bar, put purchasing power of the consumer dollar and put your birthday in there and see how much you have been robbed since the day you were born. But the problem with this stuff is that it can only go 1.0 0, 0, and maybe they'll take it out a couple more zeros. But basically, this creates limitations, and it would make inflation more obvious. Once we're fully in a digital system, okay, they can still, they can't keep this game going, this debt base going, but in the new system, so this is about burning that off so they can start anew. But in the new digital system, you won't even be able to see that loss.
Right. Or necessarily feel it as acutely. Yeah. Yeah. You know, it's interesting because as you were saying about, I was born in 1970, and when I was a little boy, a quarter meant something. Like if my mom and dad gave me a quarter, because we had a dime store near our house, whatever, that was cool. You know, that was a big deal. My daughters now are 13. And this is interesting because it was just yesterday or the day before, they had a couple of friends over and they'd gone to we don't have a grocery store by our house, and they came back and they had change. And I heard two of them, I forget how they said it, but they were like, oh, I don't even want that stuff. I don't want to deal with like they didn't even want the change, right? Like it was worthless, basically, is what was communicated. I didn't say anything, but I'm thinking, wow, I'm like, well, what about that's money, you know, and or that's what, you know, it's like it's worthless. They don't even want that. They don't even want it. They like throw it away, basically.
I mean, I hate to tell you this, but I kind of feel the same way. I mean, as a young child, right? One of the jobs that I loved to do was clean out my mother's purse for her, because my payment was whatever change I found in the bottom of her purse. And then one day I got away with that for a few years. Honestly, that was a great gig. Right. And then one day she happened to walk in when I was finishing up, and she saw how much change was on the table that I got to keep, and I never got that deal again. But, you know, today when somebody gives me change, because I do like to use cash, so I use a lot of cash, you know, it goes right in the tip jar. I don't even want to deal with it. So I can relate to that example, even inside of my lifetime where it mattered, right?
Yeah. Well, I have a question for you. You're walking out of the local grocery store. You got your cart. You're walking to your car, and out of the corner of your eye, you see a nickel laying on the ground. Do you stop and pick it up, or do you keep walking?
I hate to admit it. I keep walking.
Okay.
There was a day where if I saw a penny on the ground, I'd pick it up. Remember, find a penny, pick it up, and all the day you'll have good luck if it's heads up. And you'd put it in your shoe, and you'd walk around with a stupid penny in your shoe all day. I mean, I'm like, you know, because then I got to deal with it, and I don't want to deal with it because it has no value anymore. And it doesn't. It doesn't. Now, if it were a silver coin, then I feel differently about it. But
if it was a quarter, you might pick it up and see what year it was made, right?
Right.
Yeah. Yeah. You know, the last thing I want to say, you said something that was very interesting to me that I hadn't really thought about. Maybe I knew, but I hadn't put together. And that is, and I'll go back to what I said earlier. One of the most powerful things you said to me the first time we talked was that things seem crazy because we're getting near the end, where, you know, big events could happen. But what you just said now that really caught my attention, that I hadn't really thought of, is that President Trump is a change agent. And and I think, like, right now, hey, the market's doing great. I know I look at the VIX index, and the VIX is low, and, you know, everything's dandy. The economy's, you know, but that we might be sleepwalking. Like, Donald Trump is no stranger to major events. He likes kind of, and again, I'm not being political here, but he likes big things and big things to happen, that there might be some surprises around the corner. You know, I think it's going to be an interesting. Go ahead.
We entered an extraordinarily interesting time, and my personal opinion is that we have entered the melt up phase of this.
Yeah.
And the melt up phase, so markets keep going up, cryptos keep going up. I mean, they're already at nosebleed valuations, but so what? That can keep going up as long as they keep doing this and putting more money out into the system. That makes things look like they're going up. but that is also a trap, because I also believe, because of the monetary velocity, that we are already in the beginning stages of the hyperinflation. It's just not quite obvious yet, but we are super close to it, because I pay a lot of attention to consumer confidence. This is a con game. It requires confidence. And so we keep bouncing off of the bottom support level. In other words, the lowest that confidence in our dollar has ever been. And so we hit that, and then we kind of bounce off of it. But I'm paying attention for when we break through that, because technically when we break through that, I think it's game over.
Game over.
You know, I mean, the beauty part about understanding the technicals is it doesn't matter what you're looking at. It all works the same. And so, you know, that support level. So I believe that we've entered the melt up phase. The markets will get a lot higher. Crypto will get a lot higher. The bond markets, you know, I mean, now there are going to be 3 members on the FOMC meeting that can push the lower interest rates. And people need to understand that what that actually means is that they want a less valuable dollar, right? When interest rates go down, more people borrow and spend, and more of this happens, right? So it puts the visible price of stuff up, but at the same time, it pushes the purchasing power down. And so, it's a trap, and it's the way they do it, and they've done it every time, and this time is no different. And these transitions, people think we'll just slide from one into the other. It's not the way it works.
There's pain, right? You know, there's a saying that I read years ago that stuck with me. And I apologize if I've said this to you already, but I think it applies to everything we've talked about. And that is that mathematics shows no forgiveness on the altar of truth, and that not even God can change the fact that 2 + 2 = 4. You can't just make value and wealth out of nothing. And I loved what you said earlier, because I agree with you 100%. That it feels like, as a country, where I think you use the analogy of a family, but like as a country, that if you know you're going to be claiming, like if I knew that Susie and I were going to be claiming bankruptcy, and I go out to get the mail here in a little bit, and somebody sends me a credit card with a $8,000 limit on it, and I know that I'm doomed, or we're doomed already, we're going to go spend the $8,000, right? And it really, sadly, feels like, as a country as a whole, that's where we are right now. So always I want to show your website. I need to show your website, and I need to show your YouTube channel. But before I do that, there's somebody who wants to say hello to you. If you have just 30 more seconds, I know it's one of your favorite people. I don't know if you remember him, but he's inside this box, and he has a recession on one side and inflation on the other. And it's your old friend, Jerome Powell, with his toilet paper money in there. So he was shaking when he saw you shooting your dollars. And then one other last question for you: who cleans up all those dollars after you're done filming that you shoot out during the all right.
Go to the gym. I do it all day long. And you know, Tiger Stacker gave me this, so I love that. I might just use it. But you know, opium. Right?
Opium, there you go.
Not a plan. It's not a plan. And that is what we do at Zang Enterprises, is that we have our sound money strategy that I developed for myself since I've been studying currencies and currency life cycle since 1987. And so they're all customized, but it's about making sure, because here's the reality. When one fiat money dies, another one is going to pop up. But what gold and silver do for you is they are the bridge to hold your purchasing power intact from one system into the other system, and dare I say it, enable you to take advantage of the crisis. Never let a good crisis go to waste. Why is it always the 1% that take advantage of it? Because wealth never disappears. It merely shifts location. How
Yeah.
about having the wealth shift your way? What a flipping concept.
Yeah, yeah. And gold and silver have a perfect track record of winning against fiat currencies for thousands of years. You know, all those different bills you have that you can hold up. This is not what gold and silver are facing right now with the US dollar. This is not their first rodeo. They've been doing it. Yeah, they've been doing it for a few years. They've been at it for a few years. I'm going to pull up your website here. Get that on the screen. There we go. So if you want to learn more about Lynette, you can go out to LynetteZang.com, and I will have that link in the description of this video. And Lynette also has a rapidly expanding. Hold on here. Let me go back. I screwed up. Hold on, Lynette.
Okay.
I'm going to look at you for a second, and I'm going to reshare this. I don't have a Josh down here. Here we go.
I'm lucky.
Yeah.
I am lucky.
I know you are. I know you speak highly of him. Okay, and there is Lynette's YouTube channel that you can go and subscribe to, Zang Enterprises. And how often do you do a live stream? You said every Tuesday?
Live stream, yep, every Tuesday at noon Arizona time. But we publish 7 days a week, don't we, Josh? Yeah, we publish 7 days a week.
Oh, you do? Okay. Okay. Mm-hmm. Anything else? Any other ways people can follow you, or anything you want to share with everyone before we bid farewell?
Absolutely. Well, we're pretty active on Twitter at the Lynette Zang, and also Instagram and Facebook at Lynette Zang. So, and we like calls. I love our phone number. I really do. It's 833 GLD ZANG. Or I'll translate it, 833-453-9264.
GLDZANG. Now I'm and what is it? 833 to start with?
Yes.
Okay. All right. I'm going to call you sometime, Lynette.
You better.
I will. Well, hey,
too.
That's right. That's right. On behalf of myself and our audience, right? It's you and I talking, but we've got somebody who's been watching this and I think learning a great deal. Thank you. And I can't wait to talk to you again.
Anytime, Ron. Anytime at all. It's been a pleasure.
Thanks, Lynette.